What do we want to talk about today? Very, very important and most greatest thanks reaching out to Ramesh and the Indian community. Ramesh, thank you very much for making this happen and possible. The idea came for and because of the intention to give everyone who is interested an outlook of how to get a good housing loan in Germany, how to get the details that nobody is talking about, how to get the facts to know something about, and how to get pre-checked, prepared, and etc. To make a long story short and start off with an introduction, I have brought a colleague of mine with me. His name's Eddie. He is joining us today, and he is also co-hosting this webinar with me. We both are, let's call it, the main English consultants in our company. What does our company do? Our company is existing since almost 25 years. We've been privately funded by some already retired founders. They had the pleasure to hand the company over to me and my two other co-partners. We bought the company in the beginning of 2016 and then did a management buyout until 2019. Me, for myself, I joined the company in 2012, and Eddie did join the company last year. So he has his first year passed and his probation time successfully mastered and over. Like I said, the company is run by me and two other partners. We are a company of 13 bank specialists and former bank consultants. So we are educated and professionalized by banks. And the only thing that we do is we do consult housing loans. And this is what we do 24/7 out of our mission and out of our passion. We are connected to all of the banks. We are an independent consultancy company, which is the biggest here in this area, who is privately run and funded. Means we do brokerage around €250 million of loan, like 250 plus minus million, with over 1,000 customers every year coming up. Means we are kind of a good number for the bank to work with and kind of a good number for the bank to cause an impact on some positive results for you. For example, having a better preferred treatment, like an interest rate, better approval, faster approval, easier document qualification checks, or the power of mouth and the power of word. If we say that this is possible, then you most of the case can rely on that information that the loan is possible. And this is what we do. Like I said, we do consult you. We do consult you free of charge because we get paid by the bank for doing this. Once the case is, of course, applied and approved, we get paid by the bank, not beforehand. That's why it's very important for you not only to gather the information, but also then in the second step, once you are clear with your thoughts in buying a property in Germany, to also come back to us to give you the best possibility of bank check, bank rates, and the whole application process. This is what baugeldundmehr does for you. Those are all your benefits, besides of course, the English consultation, which is obviously also included in our service package. And we do stay your consultants, means the brokerage is not the only part. We do guide you from the first step, like today, giving you the information of what to know beforehand, how to get pre-checked, how to get your finances sorted out, and the possibility of getting the best rate without some illusional informations or some illusional steps. Eddie, would you like to add something?
No, so far it's been pretty complete. I think you already underscored that it's very important, and there's well preparation. Of course, you probably will get to it in the next step that we are, as soon as you think about buying a property in Germany, you can already consult us. So it's not like you have to have an actual property on your hands to deal with us. You can already ask us early stage. You can get into conversation with us to get consultation.
And this is where we would like to start. So maybe you can also continue, Eddie, by sharing with us the thoughts of the first steps and what to know in the first thoughts of if somebody is playing with the thought of buying a property.
Yeah, well, as soon as you're settled with your income and you know where you are in terms of how much money you make and how much equity is at your disposal, and the first thought comes to your mind that you want to buy either a house or a flat, be it for your own self-use or even maybe as an investment opportunity, then you can consult us and we will have a clear discussion about your options and your budget options. What is in store for you? How much can you afford? What is reasonable? And from there on, go on with the next steps. It's maybe also important to note that Germany has, I think it's a very unique position that technically, I mean, I underscore technically, it's possible that you can have 100% loan to value ratio. This is what also is widely proclaimed in social media when you look at on the internet. But this is only half of the truth because European Union and bank regulation already are putting a lot of pressure on banks to avoid 100% loan to value ratio. So it's always recommended that to have equity on the side and actual Eigenkapital, cash, to bring into the investment. And the minimum standard is here the transactional cost, which is depending on if a realtor is involved or not, between 5.5 and 9%. So let's call it 10% of the purchase price, and also at least 5% in additional equity, because that's again 100% loan to value ratio is technically possible but not recommended, because the banks also take a lot of margin on that because they are under pressure to not give out so many loans with 100% loan to value ratio. I hope I don't overfeed with information right now. I just
Yeah, no, this is a very important topic you're talking about. I would like to get even a deeper dive into it. Just telling the community that you definitely have to make up your mind about the things, what you actually do want and what you actually don't want. It is, like Eddie said, technically possible to aim for a 100% loan, means a full property priced loan. Full property means if the property costs 200,000 or 300,000 euros, the bank technically can provide that kind of loan in such height. But of course, the bank will let you pay for this. And this is what Eddie also said. The interest rate is being calculated by the bank on several and different factors. And Manzi, thank you very much for the questions. And by the way, everybody who is asking questions, please feel free to type it into the chat. We will get back later to the questions and we'll answer every question that you have. But let me stay pretty quick with that topic because it is very, very important to know. So the interest rate is calculated by the bank exponentially and depending on different side facts. But the most important one, which causes the major impact, is the loan to value ratio. And this is where almost all of the banks still calculate in an old scheme, an old way. Means 100% has an interest rate of the highest one, and then you have some steps going down. And this is like 50%, 95%, 90%, 85%, 80%, 70, and 60. Means by every 5%, at least in the upper 20% range, by every 5%, the interest rate gets better. And the most important impact are the first 10%. Because if we do talk about ranges, what the interest rate range is currently at, then you technically have the best rate, very, very best rate, on approximately a level of 3.5. And this is by June 24th, 2026, actually, today's best rate. Why do I accent this very much? Because the interest rates are changing every day, and also some special programs and some specialities of the banks are changing every day. The interest rates being calculated even twice a day by some banks. But let's get back to it. So the most important part to cover are the first 10%, because first of all, the most margin that the bank can pack into an interest rate happens in the last 10%, because this is the major and main risk part of the bank. So if we talk about a 100% interest rate, so full loan of 300K, then the bank technically is allowed or try to get an interest rate of around 4.2%. Means there is an upcharge of 0.7 in relation to the best case rate. But if we talk about a 90% loan, so we cover only the first 10%, then all of a sudden the interest rate gets to the area of somewhere around 3.7, 3.69. maybe in best cases even 3.60 something, if we exclude some other extras and special payment options and very short supply-free time and et cetera, and green building. So in the best case. That means that only by contributing 10% of equity, you do save 0.5% on margin. And this is very, very recommendable. And this is what Eddie would wanted to inform you about. Plus the very, very also very relevant for you, a very important topic regarding full property loans, like 100% loans. As long as you do have a blue card, as long as you do not have permanent residency in Germany, the banks demand at least 5 or at least 10% hard cash, means the bank only follow up with a 90% loan. The 100% loan can be processed if you are a citizen with German citizenship, European citizenship, or Niederlassungserlaubnis means permanent residency in Germany. So this is the most important information on what is the difference and what do we recommend. Of course, we do recommend you to contribute as much equity as possible, but we also do get in very, very intense consultation once you book the appointment with an individual consultant in your individual approach, that this is reasonable. It's, for example, like 10% down payment is reasonable, 20% not really, because the difference that you save in interest rate reduction is maybe not as big as you can do by let the money being invested in the market. Depends on where your money is invested, but I think you know very, very good how to invest money. So yeah, this is the topic about property and 100% loans. Of course, what to know else is, as Eddie said, your budget, because there are some indicators that we can give to you. Eddie, you can talk about indicators in a second. Indicators are to give you a sort of feeling and a sort of average where most of the people are located. And these indicators, Eddie will talk about more.
Yes. So basically, over the course of loans being part of the banking system, of course, we have a track record of several decades now, and banks build up these kind of track records and trying to find everlasting indicators to figure out what is a catch-all indication, basically. For example, that would be on the income side to set aside, say, like 100x your monthly income. So if you make 3,000 a month, that would indicate a total max budget of a loan of 300K. This is just an overview. That doesn't mean that it applies to your individual situation, but it gives you an idea of a certain fact. Also, when it comes to indicators, which is important is that banks don't really go over 50% of your monthly income. So when you make the 3K net a month, your monthly rate for paying the loan shouldn't be higher than 1,500, which is, or 1,500 including all loans. So also personal loans. If you have a leasing or private loan or other loans, that should not go over 50% of your monthly income. Then, yeah, do you have any other indicators, Dimitri, that I may forgot at the moment?
Well, you mentioned the first and like two most important ones. First of all is net times 100, which is the budget indicator of how much loan technically you can or should take. It's like about it, just a recommendation, and also the indicator between not to exceed 50% of your salary. Also, an important recommended indicator. Recommendation is always like such a large word, but there is a recommendation how high the monthly payment should be if you really don't know where to locate yourself. And this is 30 to 40% out of your salary shall be contributed towards a repayment of a property. For example, interest plus principal payment. So if you make that 3,000 euros Eddie mentioned, your monthly payments should be somewhere around 900 to 1,200 euros. This is at least a rough indicator. And also, if we just reflect the other side of the loan part, 3 net times 100 is 300K. If we talk about 300,000 euro loan, and we just did mention that the current monthly payment And the current monthly interest rate is somewhere around, in the average case of 3.75, if you do contribute like 5% or 10% of the property purchase price, and you have 1% on repayment, on Tilgung, then we do calculate somewhere around a 270,000 euro loan. Then your monthly payment is surprisingly in this range because it is 1,060 euros. And this is where all the indicators do lead to. This is how to at least get yourself a rough imagination of how much you should or can afford technically with your salary. Of course, indicators, if we talk about indicators, do get less in relevance the higher you earn. Means if you are a super high management level earning about 10 to 10K and your wife is also working, you have double income, no kids, you have 16K a month, then indicators do not really make some good sense, because then also the bank might go up a level of far above than 50% of your salary, or they do not stick to that 30 to 40% range. So let's call it like that. Indicators do work when you are in a good, decent average field, let's say up to 10K.
Absolutely.
So
yeah. Sorry to interrupt you.
So no, go ahead.
It's absolutely just an indicator, as the word already says. It's not the total truth, and the individual truth is sometimes different. That's basically what I want to say.
Absolutely. So yeah, let's do the simulation. Let's call it a sunny, wonderful Wednesday night after this webinar. You are super thirsty and hungry of buying a property. You go online and then you see a property of your choice. You do fall in love with it, and what do you do then? What are your next steps? First of all, if you have the indicators in mind, you can still check if you are eligible somewhere in the area. And if not, of course, you have always the opportunity to book an appointment either via our homepage. It works perfectly online. So you can visit baugeldundmehr.de. You can click on online appointment, and then you can select Eddie, me, or any other consultant you feel related to or you would like to talk to. If it is an English consultation, you please very much approach Eddie and me. And if you are fine with a German consultation, you can also approach our other colleagues. They are perfectly fine with helping everyone with the same service and quality. So you reach out to us, you say, hey, Dimitri, hey, Eddie, I have found a property, what to do next? Then we normally ask you some questions in relation to your salary, income, height, contribution, how much you would like to do down payment, and what is your current residence status. And after this first express call, we can already give to you some very qualified information about what is possible, what current interest rate ranges you will land at, and also give you a very important document, which is called Grundsätzliche Finanzierungsbestätigung. This is something that is like a pre-check or like a certificate of eligibility that shows to agent that is selling the property or the seller who is maybe privately selling his property some sort of independent checkup throughout my company and our independent consultancy that you are eligible for a loan. And this makes you feel, first of all, comfortable and maybe puts you in a better position in terms of negotiation, or if a lot of people are interested in this property, putting the selection more towards your area, because you came already prepared and pre-checked with a pre-check certificate. We are always providing this certificate once you have selected the property, because it just gives the whole picture a lot more strength and a lot more relevance to it, instead of just handing out a random confirmation, because it's not really let's call it, it's not really serious. It's not a professional way of approach to just give a random confirmation, because the bank also checks the property and the property value. There is no random, you are eligible for 1 million, because the bank can reject if the property is valued less than you buy this for. This is always a veto from the bank. The property is very, very important.
Yeah, I want to go into that topic because I think it's relatively relevant for a lot of people in this chat who are probably not into deep into the German real estate market or in the real estate market in the area. We can also provide an indication if there's a plausibility when it comes to the market value based on the facts on the thing, because as when you enter the market newly fresh and you just have the idea of buying a property, you may feel insecure about, is that a reasonable price? Does that even make sense? And what does it even mean when the building is 1980s? Is that a legible price for Erlangen, Nuremberg, Fürth, or whatever? And we can help you with that. Also, on one side, with our experience, because we see a lot, of course, and we also see, because we see what people actually buy for, because we get the drafts of the purchasing contracts. So an expose is nice to have, but the truth is at the notary appointment, basically. And this is on one hand, and also we have a very strong database which provides us with a relatively reliable indication when it comes to the market value. And I think I wanted to give that information because I think it's a valuable piece of information for a lot of people here.
Absolutely. Thank you so much. This is very, very relevant. And of course, since we do exist since over 25 years, we have already gathered like almost 20,000 customers, successfully brokeraged to the banks, and have ourselves a very, very huge database, and also all the programs we are connected to with our inside views, and also to the lookout to the banks. We have a very, very close and insider lookout to all the data you may need to clear your thoughts or get a better picture and imagination of the property you have selected. Also very important for today's market, 2026. Today's market, it's a very, very interesting one, because today's market is a buyer's market. Buyer's market means a couple of years ago, 6 years ago, 7 years ago, sellers could dictate prices. Means the sellers were had a stronger hand. They had more cards, as some other people would say, and better cards. And right now, the buyers have better cards. Means you can put your position your position is strong. You can negotiate prices, and please do so. You can negotiate a lot of things. There is basically not only freedom of speech, it is a freedom of contract creativity. It means, let me give you an example. For example, classic term, buyer is buying, seller is selling. The buyer pays notar and taxes. The classic closing costs, which are, as Eddie said, 5.5%. Technically, and also not very common, but still common in today's present time, is the negotiation that the seller is paying those costs. Means, when we did realize and recap the information in the beginning of our webinar, you maybe can, by negotiating this part to the seller, instead of negotiating on the price of the property, just giving you a thought, maybe you can negotiate the fact that seller is paying the notar and tax fees, and you have 5 or 10% more towards the property purchase price. And that will leave you and lead you with a better rate. And this is very, very important, because the Nebenkosten, the closing costs, notar, tax, agent fees, they are not considered as improving interest rate equity. Only what is reduced from the property price from your equity is improving your interest rate. That's why it's very important to do this very smart and try to maneuver around some things. And this is also where we are here for. So if you have questions on that, on the process, we are also very, very happy to help you once you are with us. So, but this small trick can save you thousands and then thousands of euros over the first 10 years, just by optimizing the contract, how the contract is being built, negotiating other positions than the price. Maybe just leave the price and negotiate all the side costs that the seller is taking care for. So you can put your contribution towards the property purchase price and optimize your rate. So yeah, let's get back to my story. You have visited us. We have given you the pre-check and ran the consultation on the first appointment. It can happen in the appointment offices in Nuremberg, or it can happen online as we do now via Teams, or it can happen on the phone, or as you prefer. Then, after you have received that kind of letter from us, you attend the property, you visit it again, or you visit it a second time, you hand out the confirmation to the agent, and successfully could negotiate the price or the facts that the seller is taking care of the closing costs. Then we are getting into contact again and structuring your loan. And this is where it gets very important on what documents to bring. Eddie, would you like to start what to prepare?
Yes. So of course, in the first hand, if you already have a property on your hand or where you're interested in, maybe an expose or some random information about the property would be of interest, meaning the zip code, what type of property is it, the square footage of the property and the square footage of the plot, like maybe even information about energy efficiency, because this is also can play a role in the indication of the interest rate, since of the ESG governance regulations also play an even bigger part, or becoming a more important part in the interest rate situation. Then, of course, your payslips that indicate how much you make, of course, as well as an indication of your equity, how much you can bring in, you and your partner or wife. This is and in addition, we have a form. If you can contact us ahead of the appointment, you get an information of so-called pilot, which is basically a self-assessment form where we get basic intel about your birthday, your address, which we need to get indications from the banks quicker. But of course, we can get that data points when you are on site or at the conversation at the time of the appointment.
Also very important on that topic is everything follows, of course, everything follows a common logic sense. Means the more information we have, the better we can cook. The more ingredients we have, the better the dish will get. Means, of course, there are a lot of banks, like 400 banks in Germany. It's totally crazy. And every bank has their special rules and regulations. The one takes care about the energy certificate. The other one has an interest rate upcharge on worse energy classes, if it is a G or H. Some other banks totally do not do loans and process loans with that kind of property rated energy classes. Some other banks giving discounts on super good energy rates if it is an A plus or A building. Also some governmental loans may be possible, like KfW loans, or any other governmental subsidies or help if you fit into the criteria. Means of the more information we have about the property, the better. The more information we have about you, the better we can choose and select the bank that is technically the first indication, and maybe also be the final one we approach and apply with. Because this is also very important, your credit history, your Schufa. If you have something in your payment history, like loans, leasings, 0% loans, not because of we need it. The bank needs all the proof, even if it is entered in the credit history, especially if it is entered in the Schufa credit history. The bank needs the contract to it. So try to get all the documents before your final approach, because we have very tight timelines with the bank. We can secure interest rates, but not for the eternity. We can secure interest rates for a few days, and then we need to apply. When we apply, we need to provide full documents set to the banks, or more or less full documents set to the banks. And then it might get a little bit nasty if there are some documents missing and the case needs to be put on hold, or interest rates needs to be recalculated because expired due to missing data, or some questions coming up because of some false information or not provided information. So that data quality is very, very important in the first consultation and also in the second approach. Once you are finalized with the property, please, please, please try to help us help you. Means if you need assistance with the agent, just let us know. We will help you gather all the property documents from him. The document does not exist, or the excuse that document does not exist coming from an agent's mouth, does not exist. There are documents related to the property. And Germany is like a super huge bureaucracy. We all know that. And we need a lot of documents related to the property. We need the location plan where the property, if it is an apartment, the location floor plan where the property is on which floor. We need the correct measurement of the floor plan. How big is the property in terms of rooms? We need the calculation of living space. We need the division plan. We need the land register, where also some very important informations may be located. And we need the energy certificate. Those just to be set as a few documents when you are aiming for a apartment to buy. If you're aiming for a house to buy, the documents depends on the house type. The same may be extended, maybe a little bit shorter. Once we have gathered all the documents, we do the final check. The final check means we do either connect via phone or Teams or however you would like us to connect to finalize your offer and your application to the bank. We take an Outlook again to all of the banks. We do screen share via Teams, or we can just do a phone call. And then we check and monitor all the banks. On that day, this is a very important day because this is where your interest rate gets fixed. But this is not your final interest rate. This is the day where the interest rate gets fixed for application. It's very important to know because in today's times, there are also, like I said, different banks, different cultures, different types. Some banks takes 3 to 5 days to finalize the confirmation. Some banks take 3 to 4 weeks. Usually the more cheaper ones are the ones that are taking the longest time to finalize. So in the end of the day, the 3 weeks shall not be to your negative position. Means if, for example, today we have finalized your application, we do set a interest rate lock. And this lock is basically considered as the best rate by today, but also in the same place, the worst that you might get in the end. Because once the application has started at the bank, we get a time slot for the next 3 weeks for the application to be reviewed and approved. And during those 3 weeks to pass, the bank and we do monitor the interest rate market. And if the interest rate gets better, you get automatically an improved offer from us saying your interest rate being corrected downwards. Please confirm. And then we pass the corrected offer to the bank. And if the interest rate gets higher because of some political uncertainties, some bad news coming up in the market or economy, then you still have the best position because you have locked, or we have locked your interest rate that we have applied on the day of application. Means you always have best. You always have the best case of the best interest rate. And this is also possible via us and through us in our company and in our way of how to apply. Then once the bank has finalized the application, we will get a confirmation and a certificate saying the loan is approved, and the bank automatically releases all the documents to the notary so that you can happily go attend and buy a property, visiting the notary, getting your signature done, getting your land charge done, everything in one appointment. And then luckily in 5 to 6 weeks, getting the payments and the key handover and call yourself either a property owner and move in on your own or a landlord to rent out the property for some tenant to pay you the monthly payment and let your asset grow while you sit and relax and have your property on your hand. So that's basically the process in a very short form, explored and informed. And now we are putting point number 4 that we had for today into discussion. And this is a very important one. So what does affect the rate? Maybe Eddie, you would like to share and spare a few words about it in terms of general information. What does affect the customer rate? We did always and already talk about the rate so much, but maybe we can gather the information together one more time. What does affect the interest rate in the end?
Yeah, well,
how to get the best one?
I think one of the most critical factors you already mentioned is the loan to value ratio, because this is where the margin is hidden, as you already spoke out about this fact. And what is also the equity, how much you bring into the whole project plays a big role. Also, what I mentioned earlier, energy efficiency plays an increasingly crucial role when it comes to the interest rate. Also, regulatory on the European Union side is playing a big factor here. And so if you have a especially very green building, meaning very energy efficient building that can provide a better interest rate sometimes than, for example, a very old building with old heating systems, lackluster windows, or not accompanied by the necessary state-of-the-art building procedure, basically, that can give you a downgrade on your interest rate or make it more costly for you, of course. But also, when it comes to energy efficiency, when you say you want to go green, you're basically finding a property which is used like 30, 40 years old, and it has bad energy efficiency. There's ways we can help you, of course, with that consultation, government subsidized loans that help you to, when you have modernization costs, to finance that with a government subsidized loan to go green, basically increase the energy efficiency of the building, which helps substantially in some cases with the interest rate, as well as new buildings, for example, have also government subsidized loans that supply with energy efficient buildings. And in that regard, what is also playing a big role, the fixed term rate plays a big role. So how long would you actually like to, when you agree with the bank for an interest rate, you use usually timeframes like 5, 10, 15, 20 years, or till it's paid off. The German standard here is a 10-year fixed term rate. That's usually what most people prefer, because the back side of that information is that after 10 years, you can sell a property in Germany without having to pay capital gains taxes. So that's why
on a rental one.
On a rental one. Self-use, it's a little bit different, but this plays a high role. So the tendency is the longer you fix the rate, the more you have to pay. What is the best fixed term rate? Depends on you, basically, because we can give you the stats of what was in hindsight the best option to go, or where we are at in a 40-year ratio or 40-year average. But the most important thing is that you have the best sleep with your fixed term rate. So the best fixed term rate is the one you decide upon. We consult you and guide you through that. But this is a very frequently asked question: what is the best fixed term rate? Also, if you are able, by financial power, by monthly cash flow, to have a higher repayment, that also gets some beneficiaries when it comes to the interest rate. That can have an impact on the interest rate. Also, what Dimitri mentioned earlier, data quality when it comes to paperwork, the bureaucracy around the property. Some banks maybe are happier with a lesser of a quality, especially when it comes to older buildings. They tend to accept a more lackluster bureaucracy around it. But these are usually the banks that are not in favor in terms of the interest rate. So when you seek the best interest rate, it's always recommendable, as Dimitri already pointed out, to have all the documents necessary and in the certain quality, so you can basically have the whole universe of all the 400 banks on your side. Because when you say X, Y, and Z is missing, or we're missing page X, Y, and Z, then some banks, maybe we can go into conversation with them and explain and make it plausible for them. Then they go ahead. But usually these are the banks that are not on the cheap side of the coin.
Absolutely. So, guys, also to maybe give you some sort of help in the whole process. The more flexibility or security you want, the higher the rate gets. If you would like to have some special payment options for the first 10 years to have every year the possibility to contribute more money, for some banks, it is an upcharge of the rate. If you can exclude it, if you want to exclude it, some of the banks are willing to give you a better rate because you cut yourself in flexibility and the bank has better plans or can plan accordingly and better how their income side will look like. Supply-free time, also very long word in German. It is Bereitstellungszinsfreie Zeit, means once you buy a property from a builder that is being finished in the next 2 years or 1 year, the longer this time frame lasts, the higher the potential interest rate gets, because this is something that we also need to include into the loan, and not every bank is willing to wait for the next 2 years and get no interest payments or just a little interest payments and give you a very, very little rate. So this is also very, very, very important to know. The more flexibility, like I said, the more security, like Eddie said. If you would like to have a 15 or 20-year loan or 30-year guaranteed interest rate, that's fully possible. But the most competitive one is 10 or sometimes even 6, 7, 8 years. But with some banks, most classic one is the 10-year time frame where you fix your rate for 10 years because this is the most competitive one in the sector. And after 10 years, we are free to choose whatever bank it will be in the next 10 years, or we stay with the same bank, or we go to another bank, or you pay off the loan at once because you have accumulated your money with some other investments that you had a lucky hand on. So that's basically the very fastest and in a short form, relevant information regarding housing loans. We are having some questions in the chat came up. So we would like to answer the first one of Manzi. What the current interest rate is. We did explain about data quality and question quality as you form a prompt. That's basically the result and the answer of that question of the current interest rate. In an average, you can say between 3.5 to 4.5, depends on your personal specs, on how much down payment you would like to contribute, how energy efficient the property is, how long you would like to fix your interest rate, whether you would like to have some special payments or not, how high your monthly payment shall be, and when is the money ready to be released to the seller, now, in a month, 2, or in a year. Those are the major impacts of your interest rate structure. And if everything is set to the minimum and you have the highest down payment possible, your interest rate is 3.5. And if you have maximum flexibility and you have no down payment and you would like to have the lowest monthly payment possible, but the highest interest rate guarantee and the lowest down payment possible, you can also expect an interest rate of 4.5 and above. Next questions was by Kadbi. Does the interest rate also vary upon type of residence permit? Technically, no, because the bank is not allowed to give you some kind of discrimination. That's why the bank is always structuring the interest rate based on down payment. And down payment means, as we already told before, if you have a residence permit that is limited or a blue card, then the bank is basically forcing you with their criteria because of the residence permit to contribute 10%. And that's basically the effect in the next way. Next questions also was by Katbe. If you have a salary account with the bank, is this anything or can this help you to get a lower interest rate? With some banks, yes. With some banks, no. It depends, because with some banks, like let's call it ING is the orange one with the lion logo type, pretty familiar one. They sometimes have that kind of a special deal. If you open an account, you can get a discount of 0.1. But this is something that is basically sometimes as an extra deal, and not cannot be copy and pasted to all the other banks. Normally, the banks do not really like this or do not do this. Next question was, if I have less down payment but have stable high salary, should I wait to increase my down payment or just go with a higher repayment? Very, very interesting and very smart question. It depends. It depends on how fast you can save the down payment, and it depends on what is less. If we do talk about you have 10% and your next goal is to reach another 5% and it takes 2 years to do so, please no, then act now. If we do talk about a 100% loan and the next step to get a down to 95% loan and it takes 6 months, please do so, because this is very relevant. This is that's why it depends. Individual approach. It depends on the real number. So everybody who is having a question, please feel free to type it into the chat. We still have a couple of minutes left that we definitely can use if you would like to. We will give you a couple of minutes to think about your questions. Eddie, if you would like to add some few words, you are very welcome. I am technically done with my input for today.
No, I think we went through the most important things, the more general information. We've been very complete on this, in my opinion. And of course, if there's more questions, feel free to ask them. And anything else, as you already pointed out, is pretty much a private consultation, individual approach, because every situation is different, every personal situation is different, every personal priorities are different, and also every property is different. So if there's some interest, we're always ready to speak.
Wonderful. So as long as now no questions have come up yet, I think everybody is. I hope you have air condition. We do have. Oh yeah, there is another question. Extra costs from the seller, notary, and others. Can you explain it more in detail? Yes, sure. So the thing is, normally, if you do talk about a loan and you talk about all the costs, you have a purchase price. The purchase price is, let's take our example from before. You have 300,000 purchase price, and based on that purchase price, you have notar and tax and agent fees appear. Nebenkosten in German, closing costs, English word, or it's kind of English word for that. Notar charges usually 2%, somewhere around 2% for all the bureaucracy work, for getting your ownership swapped, for getting all the legal processes done. And Bavarian tax is 3.5% for one-time land purchase tax, which makes the Nebenkosten to 5.5% in an average. And this is something you definitely need to pay out of your own pocket, out of your hard cash. No loan, no nothing. You need to contribute this money from your own pocket. So this is 16.5K. And those 16,500 could technically be negotiated to the seller's responsibility instead of negotiating the price down to 285. Why do so? Because if you do negotiate the price to 285 or 284, whatever, then you still have closing costs of 5.5%, but based on 284, it's a little bit less. It's maybe not 16.5, it's 15.8, but still 15.8 out of your own pocket. In the end, you need to, your priority should be to get as much down payment as possible to reduce the loan in terms of ratio to the purchase price, loan to value ratio. Means if you negotiate the part of closing costs, Nebenkosten, to the seller, you have your cash to put it down to the property to reduce the loan that you take, and you leave the price unnegotiated. You better negotiate the fact of taking care of the Nebenkosten to the seller's side, because then you all of a sudden have a 95% loan that can give you a 0.2, 0.3 better interest rate. So that's the idea behind that. More, we would definitely love to talk and explain to you more about that in the consultation. Please feel free to book an appointment on our homepage, baugeldundmehr.de. I will type this in the chat and select online Termin, Buchung, and then we can talk about that later. Then next question came up, which is better, buying a new property or older one from financing perspective? It also very pretty much depends on what the new property is qualified for. Has it an energy efficiency certificate where we can get a KfW loan for, which has a discounted interest rate? Is the property already yet to be finalized within the next couple of months? It's more attractive than the property is being finalized in 2 years or 1.5 years. And also the purchase price of the existing property is a very important leverage and very important point, because of course, if you buy a property that is with a super attractive area, but the used one has a very good price, I would always prefer that instead of getting a new one, because of the square meterage price, because of the location, and on the overall situation. Next question, should a house be registered in only one spouse's name or in both husband's and wife's names? Which option is more beneficial in terms of tax and loan? There is absolutely no benefit at all. Some banks like if you buy together, you take a loan together, because it is very important that both own both. If you own the loan both, you should own the property both. This is what the intention of the bank is. When it comes to a rental one, it maybe look a little bit different. It also depends on what you are aiming. What are your thoughts? What are your goals with the property? Would you like to swap it after 10 years? Would you like to sell it? Would you like to keep it? But normally it is no negative impact on tax, no negative impact on interest rate. If you buy together, take a loan together. That's the only recommendation and intention. Everything else is financially creative. We can talk about this if your individual situation fits to it. It's very important. Classic case, 95% of the cases is everything together.
Oh, yeah.
Okay. So yeah, let's call it a day. That'll be it. We have talked about a lot of things. I hope you had fun listening to us, gathering all the information. Like I said, we would love to welcome you in an appointment at some point once you are there. And if you have any questions, please, like I said, one more time, please feel free to reach out to us. We are just an email away. We do consultation because we, first of all, love our job. Of course, we get paid by the bank, but first of all is the passion and the love behind it. This is what made us perform in the past 25 years. So please feel free to contact us. We would definitely like and love to help you on your personal project, whether it is a house, an apartment, a renovation, or maybe an extension of your loan. Maybe you already have one and you would like to get another one or get your loan refinanced, then please reach out to us. Like I said, we are here for you anytime, online or in presence in our office. And thank you very much for joining us today. You will receive the link to this recorded session and webcast from Ramesh once we are finalized it. And have a great time. Have a great and maybe not that hot of a night and evening ahead. Thank you very much for listening and see you soon. Bye-bye.
Thank you for your attention and hope to see you soon in private consultation.
Thank you, Dimitri. Thank you, Eddie.
Thank you.
Bye.
Bye-bye.
Bye-bye.